Hi, I'm Kerry Artek, Chief Analyst for Wicked Stocks. So you've probably heard by now that we're going to a paid format for our regular series of daily and weekly YouTube videos, including the Daily SPY Report, the Daily Triple Cube Report, the weekly DIA, IWM, and Bitcoin report. And so whether you've been watching our videos for the last few days or the last few months, you know that our work is unique and that does provide a distinct sense of market flow and timing. Whether you're a day trader or a longer-term position trader or an investor, you know that we cover all the time frames in all the videos that we do. I've been a market analyst for over 30 years, and I started my own commodity trading advisory off the Chicago Board of Trade in 1996, and I've catered to floor traders, day traders, institutional trading firms like hedge funds and brokerage firms, and large-scale commodity producers throughout the United States. I'm skilled in the art and science of technical analysis, and I know that you're continuing to follow my work on wickedstocks.com will assist you in staying on the right side of the market. We're offering half off your first month. Just go to wickedstocks.com, click on the premium membership link. It'll take you to a landing page that'll have a coupon link. Fill out the word half off, and we'll provide you 50% off your first month subscription. That's $12.50. That's the cost of a movie or a McDonald's meal. And I have to ask you, is that worth the cost in significantly enhancing your personal portfolio's profitability? You can cancel your subscription at any time, but I'm confident that over time, as our work continues to assist you in sharpening your sense of directional market flow and timing, you'll stick around for the long haul. Go to wickedstocks.com and fill out that premium membership form. You won't regret it.
Hi, this is Kerry Artek with Wicked Stocks, bringing you the Daily SPY Report for Monday, February 28th, 2022. I know you know, but I wanted to remind you nonetheless here as I'm doing the audio here for today's Daily SPY that we are transitioning tomorrow, Tuesday, March 1st, into a paid format. And so you could actually do that today and probably should do that today because later today, Monday afternoon, you'll receive notification that Tuesday's Daily SPY Report is ready to view. Tomorrow's Daily SPY Report, Tuesday, will not be shown on the YouTube channel. We will be putting out other supplementary videos. I'll be doing some NASDAQ 100, some SPX, underlying, big picture stuff. I'll continue with gold and crude oil reminders. And, of course, you've got the stock pick a week that I put out. So, you know, we will be putting stuff out. Please stay a subscriber because you'll see the supplementary videos. But I also ask that you become a paid premium member of wickedstocks.com. The Daily SPY Report, once again, is $25 a month. You can combine it with the Daily Triple Q for $40, or you can get everything, which includes the weekly DIA, IWM, Bitcoin, and all of our stock picks for $50 a month. And we have half off your first month's payment. So that would be, you know, and that's just typing in the half off code. You've probably seen that already on how to do that. And I just asked you to segue into being a paid member. We've got a lot of good stuff coming, especially for paid premium members, and I appreciate your support. So let's take a look at the big picture here. We came very close last week to testing this long-term support area. Today at 404.52 to 407.15, we dropped almost 1%. You know, it was actually less than 1.1%. It was about 20 ticks off the 1% threshold. I use 1% both for approaching long-term support and resistance levels and in terms of validating whether or not we have a follow-through signal when we settle beyond those long-term support and resistance levels. And I'll show you the 1% violation of 404.52 in just a bit. But I also wanted to underscore here today that not just did the SPY or the S&P 500 come very close to testing a major capitulation point, a major support threshold that is longer term in scope, able to contain annual selling pressures, and above which this market maintains a bull market, believe it or not, through 2022. But near to midterm, of course, we're in a recovery stage, we're in a congestive dynamic, but I do think that by the end of this year, we should push on to new highs so long as we continue holding above this 404.52 to 407.15 area. There are other markets, though, too, that you're familiar with. Crude oil, gold. I'm going to show you actually a couple of grain markets, inflationary food costs, so forth and so on. Let's take a look at crude here. I just want to remind you that while we certainly pushed significantly above this significant long-term resistance area this week at 92.08 to 92.83, we have yet to close above this area. We did so a few weeks ago by 4 ticks. And well inside the 1% violation threshold necessary for indicating bullish continuation. So if we did close this week in April crude oil above 92.83 by a 1% margin, that'll be 93.70 something. I don't have that in front of me. Then I'm expecting 114.94 pretty quickly. And, honestly, with speedline analysis, if you close above that 92.83 descending two-thirds speedline analysis suggests a retest of the high of which that speedline is made. So 147.27 is potentially in reach, a retest of that 2008 high over, I don't know. The timing of this is like impossible. Depends on facts on the ground. Right now, we've got some things happening over the weekend. It's difficult to say where everything's going to shake out here Monday morning, but fighting has intensified in the Ukraine. The U.S. and its NATO partners have taken Russia out of the SWIFT financial system, at least significant banking systems, banks within Russia. This is all considered inflationary. I'm not quite sure how this is all going to play out, but I will say that holding below 92.83 on a week-by-week basis, crude oil has nowhere to go but down from here. And I think the $69 to $72 a barrel area is realistic over the next 3 to 5 months if crude fails to close above 92.83. So that's a capitulation point. Here we go with gold. COMEX Gold. I put out a video a couple of weeks ago. We pushed through this significant resistance area this week at 1927.4. We didn't close below it, and we actually settled negative on the week. So it's a bit of a mini reversal high here. We can fall off from here, and so that is not inflationary. And so not until we actually close above 1927.4, and we could this week perhaps. And if so, I then anticipate longer-term bullish continuation. I think we could have another significant leg up over the next year and a half into the 25.85 area, but not until we close above 1927.4. Let's take a look also at the broader wheat market, Chicago Board of Trade of Wheat. This affects all of our costs with regard to bread products. 887.5. We pushed through it significantly last week, but we did not close above it. So there is no longer-term buy signal up to 1266.5. The broader wheat market can actually fall back from here. So that's not inflationary as well. This all supports a strong stock market, or at least a stable stock market. I guess that's the point I'm making here. And finally, Chicago Board of Trade soybeans. This impacts not just food, but a lot of industrial products as well. 1643.25. We pushed through it significantly, but we did not close above it, and not until we actually close above that area do I see a case for longer-term bullish continuation in the soybean market up to about $20 a bushel. So holding below 1643.25, the broader soybean market has nowhere to go but down. So you could make a case for all of these inflationary sensitive markets that there's nowhere to go but down from here. We don't have sell signals per se. It's just that they're all testing significant long-term resistance, and having done so, all of these markets are susceptible to falling off now in the months ahead. But we will see. That's kind of a week-by-week case. Let's get back to this chart. I know that's why you're watching this. 404.52 to 407.15, our long-term support, having almost tested it. I do think that over the next few weeks, 3 to 5 weeks, depending, we can should push into the 452.65 to 462.96 area. And there is a scenario here that may unfold whereby we could top out at the 462.96 mark, which I say can contain buying through March, possibly through April. And from there, we could fall back to that 404.52 to 407.15 rising channel bottom, rising speed line, one-third speed line. And from there, we could fill this wedge out for the next month, two, possibly three. And then I think probability suggests that it'll be upward and beyond because of the significance of 404.52, that long-term support level, able to contain annual selling pressures. 462.96, able to contain monthly, possibly the better part of a quarter buying pressures. But of the two, it is 462.96 that is the weaker and more likely to give way, and if settled above, should result in new highs over the following month or two of activity. And we'll just take it on a day-by-day, week-by-week basis at that point in time. But if we close below 404.52, then we actually have a meaningful sell signal on our hand. And I'll get to that in a moment. I'm not going to cover those downside targets today because this is already proving to be a long video. But I will sort of zoom in here and show the same chart. You can see 452.65 to 62.96 above the market, those considered objectives, and especially in light of what played out last Friday. We closed above this descending channel top. That's three weeks or so in the making. 430.16 is considered, I'm calling it a 2-star rather than just a 1-star level. In other words, can contain selling into later week, and above which upward momentum following last Thursday's spike low is intact. And we can, within the week, over the next 3 to 5 days, push up to the 452.65 level. Let's take a look at the support and resistance actually for today. You can see 430.16 below, able to contain selling into later week. 445.31 likely over the next day or two. I'll show that in a second. And that 452.65 channel top in reach by Friday's close. If we settle below 430.16, then I do think this market can give it all back to 407.15 long-term support within the week, and I'll show that as well. But let's take a look at the upside. That 437.13 is still an intraday pivot point. It held pretty well early in the day on Friday. We backed off a bit, and then we came storming back to settle very strong at the end. On the closing bell, we settled just above it. I'm calling it an intraday pivot point, above which 445.31 is likely, and below which 430.16 is likely. So if we push through, if we if we open above, push through or open above 437.13, 445.31 in reach. 445.31 is a 50% upside retracement using the all-time high from late December against the recent low placed last Thursday. So halfway back up, 445.31 is possibly in reach today. And in fact, I think it is in reach today if we happen to open above 437.13. That 445.31 level able to contain daily buying pressures. And if we close today above 445.31, that targeted 452.65 formation then likely tomorrow. And I say 452.65 remains a weekly objective above 430.16. That 452.65 level really the start of a wide band of meaningful resistance up to 462.96 that can absorb buying through March trade into April, and from there we could fall back to long-term support in the very low 400 area. If we were to close above 452.65, and I don't see that happening today, but later in the week if we do, then we're just 2 to 3 days or less away from actually reaching that 462.96 more meaningful resistance area, which I consider to be 4-star resistance, able to contain buying on a multi-week basis. Let's take a look at the downside today. If we break or perhaps open below 430.16, because I'm not quite sure how the events on Saturday in terms of the Ukraine, the intensification of fighting, the fact that there's strong resistance now being shown by the Ukrainians themselves, this could be a real pitched battle. It could get ugly. And we've already enhanced our sanctions. We've taken certain Russian banks out of the SWIFT financial system. That's significant. So we'll see. If we break or open today below 430.16, I think you should expect 420.76. That is the January low. There's also a low settlement price, as you can see, several days ago, just above that. So that is an area you could buy for the day itself. And once again, it's expected below 430.16. But I think that closing back below that 430.16 descending channel top, this market is likely to give it all back and fall back into that 404.52 to 407.15 area within several days. That is a zone, once again, that can contain annual selling pressures, and above which the longer-term dynamic, as defined by that March 2020 COVID low. This is a 2-year channel structure. We remain bullish over the 2-year time frame above that. Now, if we did close below 404.52 by a 1% margin today would be 400.47, then that would be a significant sell signal, and that should play out through Q2. I would then expect a 349.12, 50% downside retracement. That could be lickety split. That could be within 3 to 5 weeks or less, and then I would expect a nice bounce there. But over time, closing below 404.52, I see this as an actual bear market that should play out through the second quarter. That 312.84 wouldn't surprise me within 3 to 5 months of closing below 404.52. Until then, this is a mere correction, a meaningful correction in the midst of what remains a longer-term bull market above 404.52. I'm going to leave you the support and resistance for today so you can print it off your smartphone or your desktop. Please consider becoming a paid premium member of wickedstocks.com. We've got half off for the month. You won't regret it. Lots of good stuff. I will do my best to keep you on the right side of the market, sharpen your sense of market flow and timing, and you have my word on that. I will talk to you hopefully tomorrow, Tuesday, for the Daily SPY Report. You have a great day.
Hi, I'm Kerry Artek, Chief Analyst for Wicked Stocks. So you've probably heard by now that we're going to a paid format for our regular series of daily and weekly YouTube videos, including the Daily SPY Report, the Daily Triple Cube Report, the weekly DIA, IWM, and Bitcoin report. And so whether you've been watching our videos for the last few days or the last few months, you know that our work is unique and that does provide a distinct sense of market flow and timing. Whether you're a day trader or a longer-term position trader or an investor, you know that we cover all the time frames in all the videos that we do. I've been a market analyst for over 30 years, and I started my own commodity trading advisory off the Chicago Board of Trade in 1996, and I've catered to floor traders, day traders, institutional trading firms like hedge funds and brokerage firms, and large-scale commodity producers throughout the United States. I'm skilled in the art and science of technical analysis, and I know that you're continuing to follow my work on wickedstocks.com will assist you in staying on the right side of the market. We're offering half off your first month. Just go to wickedstocks.com, click on the premium membership link. It'll take you to a landing page that'll have a coupon link. Fill out the word half off, and we'll provide you 50% off your first month subscription. That's $12.50. That's the cost of a movie or a McDonald's meal. And I have to ask you, is that worth the cost in significantly enhancing your personal portfolio's profitability? You can cancel your subscription at any time, but I'm confident that over time, as our work continues to assist you in sharpening your sense of directional market flow and timing, you'll stick around for the long haul. Go to wickedstocks.com and fill out that premium membership form. You won't regret it.